Hello, welcome back to our live session monthly series for the January 2026 attempt. So, starting with the assessment procedure. Yesterday we have completed the income tax authorities chapter. Okay, so starting with the assessment procedure. Before starting it, let me introduce you what is covered in this particular chapter. See, ICA has covered two things. First is the return filing sections and relevant provisions, where the updated returns and everything is covered here. Okay. Updated returns, normal filing, belated return, everything is there. Revised return, defective return, everything is there. And second thing is what? Assessment part. Second thing is the assessment procedures. Okay, where the assessing officer will come. What we have seen in the yesterday's class, that is the income tax authorities, we have discussed what is the income tax authority, okay, and what are their jurisdictions, what are their powers, okay, in case of search, seizure, survey, everything we have seen. Now we are going to see the assessment part. Okay, we are going to see the assessment part of this particular chapter. Okay, so in this particular chapter, there are 2 points, that is the written filing sections and the relevant provisions, and second is the assessment procedures. In this, see, this is very easy to understand. Everyone understands this part. Everyone has done the practical part of this as well. Is the return filing, what is the return ITR 1, 2, 3, 4, 5, return, belated return, defective return, normal return, everything you have already understood. So I am in the concept part, not taking up the concepts of written filing sections. Okay, I am in the conceptual part only taking about the concepts of assessment procedures. The questions we will be seeing in the questions part. Only two or three questions, just a glance I will be given to you on the written filing section, because that is not as very much important of this particular chapter. Only one or two MCQs can be asked, but the assessment procedure, the assessment part is very important, and in every attempt you will find a question from the assessment procedure part itself. Okay, so the written filing sections are not as much as important as the assessment procedure part is, but yes, you have to understand what is the written filing statement sections and the relevant provisions are. So for that particular purpose, what you have to do, you have to recall all the provisions, the conceptual part in your syllabus, in your at your part, and you have to solve the questions with me. Okay, so in the month batch, see, it is a practical batch. That is why I'm not going into the details of the conceptual part of the written filing provisions. I'm only going with the assessment procedure part. Okay, so these are the notes that is already available on the Google Drive, that is made available to you. That is the assessment procedure, search and seizure. See, the search and seizure part that we have already understood in the income tax authorities. Income tax authorities chapter, we have already understood the search and seizure wala part. That is why I have not included in this particular section. Okay, we have just complete starting with the assessment procedure. So starting with the assessment procedure, let me tell you the brief idea of it. Let me tell you the brief idea of it. Understand it very carefully. See what is happening, what is the process, how the process works. First, we will understand that particular thing. See, you earn some income, earn the income in the year, that is known as what? Previous. Correct? In the previous year. Okay. Then what you do? You have to pay tax on the income. You have to pay tax on the income earned, that is in the assessment year. Correct? Correct. For that, you have to file what? Return of income. ITR 1, 2, 3, 4, 5, 6, any of the ITR you need to file it. Okay, where you will submit the tax, or if there is a refund, you will claim the refund. After that, whatever the return that you have filed, it will go to the central processing unit, that is in the Bangalore. That is in the Bangalore. It will go to the central processing unit, which is known as CPC Bangalore. Okay, where the scrutiny will happen, but by the system, that is a AI will be there, or a system will be there, the computer will be there, who will be seeing the scrutiny, who will be seeing whether you have filed the return correctly or not. Okay, that at a glance only, just a basic thing that will verify, and it will pass on the correction. Okay, so if there is a correction needed, it will send you a notice to you, okay, to correct your return of income, or if it is correct, so it will finally give you an intimation. Okay, it will finally give you an intimation. In what section this intimation came, okay, or what are the powers of the CPC law, what they will see, everything we are going to see in this particular chapter. Okay, after the intimation came, okay, your return is finally filed. If there is a refund is claimed, then the refund will come to you. If there is a tax liability that you have already paid while filing of the return of income. Okay, this is the process till now. Now, your return is finally filed. Now there is a time that the assessing officer, who is the assessing officer that we have already seen in the previous lecture, okay, then the assessing officer has the time to verify your details on a random basis. Okay, there is a risk management strategy. There is a risk management strategy implemented by the CBDT, where the assessing officer or the system of the CBDT finally check what are the assessees, in which case there is a high chances or the high probable chances that there is a evasion of tax. There is a evasion of tax. So they have filed the list tax. So in that particular cases, or in the higher cases, higher complex cases, usually the risk management strategy of the CBT pick up those cases, or pick up those assessees in whose case there is a chances of mismatch of taxes paid, or mismatch of the taxes that need to be paid. Okay. Based on the risk management strategy that is implemented by the CBDT, the assessing officer finally opens the case for assessment, for assessment. See, now here what they are saying, here just they are saying we have a doubt, see, they don't have the concrete reasons. As of now, they don't have the concrete reason whether they have whether there is a evasion of tax or not. There is just a reasonable doubt, or just a strategy that is formulated by the community, that there can be a mismatch of tax liability paid or tax liability to be paid. So on that basis, he opens up the case for the assessment. Yes, whenever he opens up the case for the assessment, so to verify his claims, to verify there is a reason to believe whether the assessee has honestly filed the paid the tax liability, or there is a mismatch. To finally believe that thing, he needs some accounts, he needs some documents, he needs some other information. He needs a statement of statements or other things. Okay, all these things he need to first take it from the assessee, and then he need to verify whether the assessee has correctly filed the income or tax or not. Okay, so first thing is what he needs to do what? He needs to ask for the documents, account statement, or other information from the assessee. So this should be the first step, because the risk management strategy, on what basis the case will be selected, is not disclosed by the CBDT, because it will be disclosed. Understand it very carefully. Why this is the first step? Why this is the first step of our section? Okay, why not this is the second? Because see, this thing is clear to you that on what basis, on what criteria the stability will select your case in the scrutiny, then there will be a high chances that you will not do those mistakes, but you will do the mistakes in those areas which are not detected, and which are not detected by the stability, which are not in focus of the CBDT. Correct or not? You will do whatever the evasion part is done, is only done on the part which is not in the eyes of the severity. If you know the risk management strategy, what are the sections, what are the part that the severity is going to verify? If you know that in advance, then you will not do the mistake in that part, but you will do the mistake in the other part, which is not in the eyes of the CBDT. Correct or not? That is why the risk management strategy is not disclosed to the assessee or not in the public. Okay. But what things that we can do to verify those claims, we can even ask for the accounts, document, other information, and the statement. So this should be the first step. See, now understand it very carefully. Now understand it very carefully. There can be a chance the assessee files the ITR, and there is a chance that the assessee does not file the ITR. Sir, see, the assessee who have filed ITR can get the data from the risk management strategy that the assessee that has filed the ITR, okay, we found there is some mismatch, so there can be a possibility of opening of the case in the assessment. But sir, assessee has not filed the ITR, then in on what basis the assessing officer can claim that there is a chances of mismatch? There can be text evasion. If my ITR is not filed, then how can the assessing officer can say that? See, there are several reasons. There can be several reasons. See, what can happen if you have paid, suppose if you have paid 10 lakh rupees for the international travel. Okay. For the international travel, you have paid 10 lakh rupees. There is now a exchange of information between all the departments as of now. Okay. So if there is a 10 lakh rupees of international travel expenditure that you have done or booked somewhat, book the tour package. Properly the tour package is given there. Okay. And you book the 10 lakh rupees of the expenses. Okay. Then you forgot to file the ATR because of any of the reasons. I'm not going to that reasons because of any of the reasons you forgot to file the ITR. Okay, on that basis, what can be happen? The income tax department can see spending 10 lakh rupees on the international travel or the tour and travels, but not filing the return of income. If someone is spending 10 lakh rupees on the travel, so he might be earning approximately a crore or less a crore. Okay, approximately a crore in a year. If he is spending 10 lakh rupees or might be 60 lakh rupees, 70 lakh rupees can be his income approximately. Yes, but he does not file the return of income. But what is the requirement to file the return of income? Is the basic exemption limit. If income is exceeding the basic exemption limit, there is an obligation that you need to file a return of income, but there is no return is filed. So in that case, whether the assessing officer can ask your accounts, documents, and other information statements or not. Now he can ask now on what source of income you paid 10 lakh rupees as the travel expenses. Okay, on what source of income? Because you did not file the return of income. So what is these things? What are these things? Now we are going to see. So the first thing that we are going to see should be the assessing officer should ask for the account document or other information or statement from the assessing officer, sorry, from the assessee who filed the return of income. Okay, if he filed the return of income, so that's well and good, he can directly ask for it. But if someone does not file the return of income, so first of all, the first and the primary responsibility of the assessing officer is that he must ask the assessee to file the return of income first. If he files the return of income and discloses all the sources of income, then it's good to go now. Then there is no problem. Whatever the penalty fine for late filing of the fees, you can take it. You can take it. There is no issue. But if he does not file the return of income, then there is an issue. Then we will see in other sections what are those sections, section number 144 and 147. What are those sections? We will see in detail in the afterwards of this particular chapter. So there can be two possibility whether the assessee has filed the return of income or assessee does not file the return of income. If the assessee does not file the return of income, the first and the primary responsibility of the assessing officer should be that he should write a notice that please file the return of income by that date. He will describe a date in the notice that by this date you need to file the return of income. Okay, if you file the return of income by that date, okay, well and good. Now he can ask for the account document, other information and statement. For what you need to understand it, ask for the account document other information in the statement, account document other information in the statement. This four words need to be understood and the learn. All these 4 points should be learned in your mind. That account document other information statement. All these points need to be taken care in your mind. Okay, because these are the technical words. So to ask for the account document other information in the statement, first of all, the primary responsibility of the assessing officer is what? He should ask the assessor to file the return of income. The first requirement is what? The return of income should be. The return of income should be filed. If it is not filed, then the assessing officer will ask you, will give a notice that you need to file the return of income by this particular date. And after that, he can ask you for the account documents, other information, and statement. Understood or not? And if it is already filed by the assessee, then he can directly ask for the accounts document, other information, the statement. And if you want to remember all these things, so see, there is a dosa, which is very famous in South India, even in the North India as well. Okay, so this is the keyword to understand all these things. D for document, O for other information, S for statement, and A for accounts. You need to understand the dosa. Okay, the assessing officer is asking you for the dosa. Then please give him the dosa to eat. Okay, so in that particular case, now section number 142 starting, we are starting with the assessment procedure chapter with the section number 142, which is inquiry before assessment. As of now, he is not doing the assessment, but to start the assessment, he first needs some documents now, some other information, accounts. So to inquire, this is just an inquiry. There is no the assessment as of now. The assessment is not started yet. It is just inquiry that is done. That is section number 142. Now, applicable when it is applicable, whether the person has already filed the return of income. ROI is return of income. Okay. Now, what person in whose case the due date under section number 131 to 139 has expired means the return filing of income. The normal case expiry is done. The normal case of return filing expiry is done. If the belated return can be filed, yes. The revised return can be filed, yes. In all these cases, what they have to do, the AO, that is the assessing officer, may serve the notice for clause 1. Okay, in the prescribed authorities may serve the notice for what? To file the return within the specified time in the notice. Whatever the time will be specified in the notice, by that time, he need to file what? A return of income. See, in this particular case, the return is already filed now. So, for that particular case, where the expiry of section number 139 is already expired, if the due date is already expired in that particular case, first of all, AO may serve the notice to file the return of income. And after that, when the return is already filed in both the cases, then he can ask for what? To furnish accounts. But accounts can be asked not older than 3 years prior to the relevant previous year. Your relevant previous year is what? Tell me your relevant previous year is for 24-25. So you can, the assessing officer can ask the accounts for what period? For period 23-24, for period 22-23, for period 21-22. This is the last date till where he can ask for the accounts. Before that date, he cannot ask the accounts for. He cannot ask the accounts for 2021 because for the accounts part, there is a liability, there is a restriction that it cannot be asked for the 3 years prior to the relevant previous year. But for the documents, other various informations, and the statement of assets and liabilities. Statement of assets and liabilities what? Balance sheet. Statement of assets and liabilities what? Balance sheet. Okay, he can ask for any time. He can ask for any time. But for the account part, only the 3 year restriction is there. Okay, not for the documents, other information, and the statement of assets and liability. Do you understand this very clearly? The assessing officer can ask the document, the information, the statement of assets and liability for the year previous than 3 years. Okay, prior than 3 years as well. There is a no restriction. But if he asking for the accounts, there is a restriction of 3 years. Understood or not? Tell me. Understood or not? Tell me that. Okay. But see, he can ask for the statement of assets and liability. Okay, so to require the statement of assets and liability, which is not included in the accounts. See, a statement of assets and liabilities should be included in the accounts now. The final accounts is what? The P&L, trading, and the balance sheet. This is what the final accounts now, including the notes of accounts and all. Okay, so it should be already included in your accounts now, which is as the assessing officer is asking for the accounts. So the statement of assets and liabilities should already be there in the books of accounts. Okay, correct? Yes, but if the assessing officer need the statement of assets and liability which is not included in the accounts, means which is previous than, which is prior to 3 years as well, which is prior to 3 years as well. See, we are saying that you can ask for the accounts. What we are saying that you can ask for the accounts which should not be older than 3 years, which should not be older than 3 years. But the statement of assets and liability is a part of accounts. So if the assessing officer if the assessing officer wants a statement of assets and liabilities of older than 3 years, in that particular case, he need to take the approval of the joint commissioner. He need to take the approval of the JC in that particular case, because the statement of assets and liability is a part of accounts, and accounts cannot be asked for the older than 3 years. But there is a specific entry written in the law that the statement of assets and liability can be asked, and in that there is no restriction of 3 years. So in that particular case, they have filed a restriction that you need to take the assessing officer before asking for the statement of accounts, which is not included in the accounts, means for the year that is exceeding 3 years, that is prior to the 3 years as well, then there is an approval of joint commissioner which is needed. Then there is an approval of joint commissioner which is needed. Understood or not? Tell me this first. This part is very much clear to you. Is this clear? Shall I move ahead? Yeah. Now, to obtain the full information about, let me just increase the size. Correct. Okay. To obtain the full information about income losses of the assessee, AO may make the necessary inquiry. AO can make the necessary inquiry to obtain the full information. Like the assessee has given the accounts, assessee has given them everything, but the assessing officer need more information. So whether he can ask for he can ask for all the information, he can ask for the explanation from the assessee. Yes, he can ask for all the necessary inquiry that he can ask. Okay, now there is a requirement faced by the assessing officer that, okay, I find it everything is correct, but I found that there can be a miscalculation in the inventory part. I found that the inventory valuation is not appropriate. The inventory valuation is not appropriate, or might be the accounts are very voluminous. The accounts are very much complex. I am not able to understand those accounts. Now, see, ask for accounts, okay, but there can be possibility now that there is a complex businesses, so the assessing officer does not understand that clearly, no, whether the accounting entry is done correctly or not, because assessing officer is not known of the accounts. You are the expert of the accounts now, but the assessing officer has not. So he can take the help of any chartered accountant or the cost accountant to verify the inventory valuation or the special audits for the accounts part. Okay, whether he can ask for the chartered accountant or the cost accountant, yes, he can ask the chartered accountant or the cost accountant to verify certain things. To verify certain things. What I'm saying, earlier it was only included for the special accounts of the accounts wala part. Okay, special audit for the accounts wala part was only included, but from the last 2 or 3 years, the inventory valuation is also covered in this particular section. Whether the assessing officer can ask for the inventory valuation, yes, it can also ask for the inventory valuation. Okay, in what circumstances they will be asked for? These circumstances are given in this particular thing. Okay, now you have to see what they are saying that special audit or the inventory valuation. Okay, section 2A to 2D. Okay, of the 142. Of the 142. What they are saying that requirement is what? If the proceedings are pending before the assessing officer, what is it saying? if the proceedings are pending before the assessing officer, means your assessment should be going on. The assessment should not be over. It should be in between. Okay, if there is an assessment going on, then only the assessing officer can ask for the inventory valuation or the special audits. Na? If the proceedings are over, if the assessment proceedings are over, then what is the case of asking for the inventory valuation or not? They can be only asked when the proceedings are pending. Correct. And in the interest of the revenue, interest of the revenue means, where the revenue means is what? Income tax department, that is CBTT. If it is in the interest of the revenue, then the tax collection can be higher if I do this special audit of the inventory valuation, because the assessee has shown the lower valuation. Then in that particular thing, what he can do, he can ask for, if he feels necessary, he can ask to get the accounts audited or inventory valued. He can ask for accounts audited and the inventory valued. But when there is a proceeding pending before the assessing officer, if there is a proceeding which is pending before the assessing officer, then in that particular case itself, he can ask for the accounts audited and the inventory valued. Now, on what grounds he can ask for it? He can ask for it. But before issuing those notices, before issuing such directions of a special audit of the inventory valuation, he need to first give the opportunity of being heard to the assessee. Like, he need to first ask the assessee, see, I am going to launch a special audit of the inventory valuation in that case, because I am not able to understand the accounts. Okay, so he will ask the assessee, see, I am giving you an opportunity. I am in the confusion of these particular things. First, can you explain me these things? He will give you the opportunity. If the assessee explains him and the assessing officer understands it clearly, then there is a no issue to, there is a no concern to raise for the special audit of the inventory valuation, because whatever the complex things that was highlighted by the assessing officer is already explained by whom? The assessee or the chartered accountant of the assessee. So the opportunity of being heard is to be given to the assessee first, and afterward, if it is also not satisfied, then if he wants to take the special audit of this inventory valuation to be done, then the prior approval of the principal chief commissioner of income tax, chief commissioner of income tax, principal commissioner of income tax, or the commissioner of income tax is to be required. So prior to issue of the direction, now you have to do the two things. First, ask the assessee, opportunity of being heard to be given to the assessee, and second is what the prior approval from all these authority or any of these authority should be taken first. Should be taken first. Understood or not? Tell me this. First, understood or tell me this. Now, what grounds the special audit or the inventory valuation may be directed to the assessee? What are those grounds? See, first ground is the nature and complexity of the accounts. If the accounts are so complex, okay, if you see the business of Reliance, understood. If you see the business of Reliance, there is the oil business, there is the internet business, there is mobile business, there are so many businesses of the Reliance currently. Okay, so in that particular case, there are complex transactions should be there. Na? They should not know, the assessing officer, even we do not know what is the accounting treatment done in the internet business of the Reliance. Understood or not? It is a complex business. Understood or not? The oil business, the oil business. It is what a complex transaction, a complex business. If we really do not understand it, then there is a high probable chance that the assessing officer do also not understand this particular thing. So the nature and complex in the account is to be done what? Is to be a problem for the assessing officer. So in that particular case, he can ask for a special audit of the inventory valuation. And the volume of the accounts, assessing officer need to complete its target. Okay, the CBT has given its target to that he need to make a tax recovery with this amount. Okay, but then when he opens an account of a particular assessee, the account goes in thousands and thousands of pages. Whether he has the time to devote all this time in that particular account, okay, because he need to fulfill the target. He has so many clients. We have seen it on the jurisdiction basis. The assessing officer has various clients. Various clients, and the various assessee can be under one jurisdictional AO. Correct or not? So if the volume of the account is so high, so the whole time will be spent on that particular one assessee itself. So it is not prudent to full time on the accounts. If there is a volume of accounts, so he can ask for the special audit that will be done by the departmental chartered accountant or the cost accountant. Understood or not? For the department, understood or not? Not for the assessee. As for the assessee, it is already done. Na? For the assessee, the assessee already made some special audits or made some audit, or the company audit, tax audit, everything is to be done, all already done. But for the account purpose, for the purpose of the assessing officer, there will be a new TA or the cost accountant will be appointed on behalf of what? The department, and he will do the special audit and the inventory valuation. Okay, first of all, this thing is clear. Now, volume of the accounts is clear. Now, doubts on the correctness of the accounts. If there is a doubt on correctness of the account, then also he can ask for the special audit of the inventory valuation. There is a multiplicity of the transaction in the account. If there is a transaction which is coming various times, but I do not understand it. What does a transaction means? And it is in the multiplicity. There is that particular transaction coming across the accounts, and I do not understand it. It forms the major part of the accounts, but I do not understand it. So I have to understand this. I might be needed a special, okay, or there is a specialized nature of business activity of the SSE. Like I said, na internet business. I have said what the oil business, or can be other business, the AI business. Okay, all these businesses are what? The specialized nature. Okay, the vaccine making the business. Okay, all these nature is what? The specialized nature of business activity. The normal parlance, they are not the normal trading businesses. Na? So there can be a possibility that the assessing officer does not understand your business activity and might end up on increasing your tax liability. So for that case, what you need to do? You need to do a special audit. Who need to do the special audit? The department will appoint a chartered accountant. Okay. So if the department is doing so, understand it very carefully. If the department wants a special audit, if the department wants the inventory valuation, so whatever the expenses that they are coming, okay, whatever the special audit fees, whatever the inventory valuation fees, whatever the amount which is need to be paid, who will pay it? To the chartered accountant or the cost accountant? Definitely the department will pay it. Okay. So what they are saying that audit or inventory valuation, whatever the expenses of it now will be determined by these authorities and will be paid by whom? Central government. Whatever, who will determine it? Who will determine it? Authorities of the income tax will determine it. But who will pay? The central government will pay. Okay, the talks between the department and the chartered accountant will be there. That how much amount you will charge for this particular criteria of this particular thing. Okay, and it will be paid by whom? The central government. Definitely, who will do it? Who it will be done by the chartered accountant or the cost accountant? Who will be nominated by? Oh, that will be nominated by whom? These authorities itself. Okay, these other of these four authorities are coming again and again. That is why I'm not repeating it. Okay, now if the accounts are already audited, that I have already said, the assessee has already done the company audit, assessee has already done what? The tax audit, but this is the special nature. That is why the assessing officer wants the audit to the accounts to be audited. Now, so whether the accounts is already audited by the assessee, whether the assessing officer can again ask for the special audit? Yes, he can ask for the special audit. There is no issue in that. Okay, understood or not? See, this is a separate audit other than the company audit or the tax audit. So he can ask for the special audit. Yes, he can ask for the special audit. Whether the already the that audit, internal audit, tax audit, everything is done. There is no issue. He can even ask for the special audit. Understood or not? Now, what time should be given to the chartered accountant or the cost accountant to complete this particular project? Okay, this particular project should be completed in what time? It said it said whatever the time will be given by the assessing officer should be the time. But if the time need to be extended, if the time need to be extended, so the extended time in total in aggregate shall not exceed 180 days. So whatever the first time that is given by the assessing officer plus the extended time. Originally allowed time plus the extended time should not exceed 180 days. So 180 days should be the criteria that this is the maximum time allowed in that particular case. Understood or not? Tell me this first. Clearly, clearly. Now, what they are saying that, see, if there is a special audit done, if there is a special audit done, okay, and in that special audit, the chartered accountant, that is a CA, found something fishy. Okay, that is something very dangerous for the assessee. Okay, but in the interest of the revenue. So the income tax authority want to use the findings of the CA in the special audit. So if he wants to use the findings of the special audit done by the special chartered accountant, okay, appointed by whom? Appointed by the department. Okay, appointed by the department. So before using the result of the special audit, the assessing officer need to give an opportunity of being heard to the assessee, but except in a case of bad judgment assessment. Why bad judgment assessment is excluded from? I will be explaining it in a while. So first of all, what do you need to understand? If the assessing officer want to use the findings of a chartered accountant done in the special audit or the inventory valuation, then he definitely need to have what? He definitely need to ask for the opportunity to be given to the assessee first. Okay, before see what it's saying that if the assessing officer want to use the result of inquiry as held under section number 142.2, okay, or to put under section number 142.2a. 142.2a is what? Inventory valuation. Inventory valuation. Okay, and 2 is what? A special audit. A special audit. Understood? In an assessment, okay, an opportunity shall be given to the assessee. Okay, the assessee should be given an opportunity of being heard, except in the case of was debt judgment assessment. See, whenever we will see debt judgment assessment, so in that particular case, when this assessment is can be open, if you see now, you will find it is open when there is a non-cooperation by the assessee. If the assessee has not filed the income tax, if the assessee has not filed the ITR, okay, then in the case the bad judgment assessment can be open, or there are can be other reasons as well. So in that particular case, there is no cooperation between from the assessee with the assessing officer. So if there is a no cooperation, then only the bad judgment assessment is open. Na? So if the bad judgment assessment is open, so why are you asking for the cooperation between the AO and the assessee as of now? Because the bad judgment assessment is open because there is a no cooperation between them. Now, the assessee is not cooperating with the AO. He is not replying for the notices sent by the AO. So in that particular case, they have said that okay, you do not need to give the opportunity of being heard, but understand it very carefully. First thing, understand it very carefully. First thing. In what case? Now, this is a very tricky point. ICA can trick you in this particular point. I can guarantee you, ICA can directly, indirectly will trick you in this point. What is the requirement? Understand it very carefully. Listen to me very, very, very carefully. What I am saying that, see, the AO is not required to give the opportunity to the assessee when he is using the special audit work done by the chartered accountant in the case of bad judgment assessment. When in the case of bad judgment assessment, when the AO is using the result of inquiry, he should not give the opportunity of being heard. It is an exception to it. But prior to issue of directions, the opportunity of being heard definitely need to be given, whether it is a case of bad judgment assessment or not. It should be given to the assessee. Opportunity should be given to the assessee, whether it is a bad judgment assessment or not does not matter, because exception is given in the case in use of result of such inquiry, not in the issuance of such directions. Understood or not? This is a tricky point. Understood or not? Tell me this clearly. Understood? Shall I move forward? Yeah. Now, coming to a rule number 14, which is a very favorite rule of yours. Why? Because, sir, here we will talk about the money. What money? See, here the chartered accountant is appointed now. The chartered accountant and the cost accountant is nominated by the principal commissioner, chief commissioner, or the principal commissioner, or the principal chief commissioner. Understood or not? The commissioners and all. These are the four authorities. Understood? Yes. So, what is the amount that they will pay to you? What is the amount they will pay to you? They are saying that, see, if you are a chartered accountant, so if you are a chartered accountant, then there is a fees of 7,500 per per hour. That 7,500 for every hour for the period is specified by the assessing officer. If the assessing officer has given you suppose 180 days and you build it for the number of hours, so 7,500 multiplied by the number of hours you have done for 180 days, you will be get paid. And if you are a semi-qualified other assistant, okay, or the qualified assistant, okay, in that particular case, see, 3,750 should be given. 3,750 should be given. Understood or not? Okay, but if the assessee is failure to comply with the notices under section number 142.1, what is the 142.1 notice? He need to file what? He need to file the return of income, or if the assessing officers ask for the accounts statement, or everything is this. It's done under section number 142.1. Okay, for the 142.1, if we fail to comply with section number 142.1, or if we fail to comply with the direction of 142.2a, that is what? That is the inventory valuation. In that particular case, the penalty of 10,000 shall be applicable in the section number 272a. 272a. Understood or not? Tell me this. The penalty should be applicable of 10,000 rupees. So this need to be just understand it. Just you need to read it, and just you need to read this twice and you will be read it. You will be in line with this particular section that there is a penalty of 10,000 as well. Okay, if you fail to comply with these notices. Understood clearly. Now understand it very well. The assessee got the account. Okay, under section number 142, we have seen that the assessee got the assessing officer got the accounts of the assessee. Now, there is the inventory. Correct. Inventory valuation. We have seen the inventory valuation. Correct. So inventory valuation is done. But there can be a possibility that there is a property is given in the fixed asset is given in the accounts of the assessing, correct? But the assessing officer is not sure of the fair market value of their particular assets, correct or not? So to understand the fair idea, what is the particular price of that particular asset, which is whether it's shown correctly or not, or whether it will impact our profit, not whether it will impact our um, tax liability or not. So in that particular case, whether he will be required a valuation expert to give the valuation of it currently. So what they are asking in the section number 142a, that what the assessing officer, for the purpose of assessment or reassessment, whatever the assessment or reassessment, he may refer valuation of an asset, investment or property to whom? Valuation officer. Whether he is satisfied from the accounts or not does not matter. Whether the accounts are very much clear. Okay, he is satisfied from it, but he is not satisfied for the valuation of an assets, investment or property. Can he ask for the valuation officer to verify it? Yes, he can ask for it. Okay. After that, the valuation officer shall do what? Shall estimate the value after considering all the evidences and give the opportunity of being heard to the assessee. Okay. The valuation officer shall give the opportunity of being heard to the assessee. If the assessee does not cooperate or comply with the direction, so the valuation officer will determine the value as per his best judgment. Okay, as per his best judgment, and the time limit for sending his report. The valuation officer need to send the report to the assessing officer. Should be what? End of the month in which the reference was made by the AO plus 6 months. Okay, 6 months from the end of the month. Suppose the suppose let me do if it is done on the 15th of October 2025, the reference is made to whom? The reference is made to the assessing valuation officer. So end of the month is what? 31st of October 2025 plus 6 months. It will come to what? 31st of March 2026. This is the final time in which the valuation officer need to give his report to the assessing officer. Understood or no? Clearly tell me. Yes, AO may consider such report for assessment and reassessment after given an opportunity of being heard to the assessee. This is the same point as we have already seen in the 142. Okay, but understand one point. Understand one point. In the section number 142, this exception in case of best judgment assessment, But in the section of 142A, there is no such exception given. There is no such exception given. Okay. So what does it mean? In case of a base judgment assessment as well, if there is a reference made to the valuation officer and the valuation, if the AO is considering the valuation officer report, then the assessing officer need to give the what? Opportunity of being heard to the assessee, whether it's a case of base judgment assessment or not. Understood or not, section above 142A is also over. The 143A is also over. Now coming to section number 143, one that is an intimation. That is this part. That is this part. That is this part. That is, I have said, the intimation wala part. It is done by the CPC Bangalore, that is a central processing unit. Therefore, understood or not? So we have to go to the section number 143. What all things that particular system will check. See, if the return under section number 139.1, in the response of the notice of section number 142.1. See, in the notice of section number 142.1, we have sent a notice to file the return of income or not. Correct? We have sent the notice to file the return of income or not. Tell me that. Yes. So whether you are filed in section number 139 or you are filing in reply to the notice of section number 142.1. Okay. In that particular case, that is in the CPC Bangalore, that is the central processing unit in the Bangalore, it will check what total income shall be computed after making the following adjustments. Okay, and these are the only adjustments. These are the only adjustments that can be checked. Okay, the system will check whether there is any arithmetical error. See, this is not possible as of now because everything is what system oriented. But if we go 10 to 12 years back, there is also the physical filing of return of income was also going on. So in that particular case, arithmetical error can be happen. But now the arithmetical happen, chances are very less or is negligible. Okay. Now, if there is an apparent incorrect claim, like if you are claiming the section number 80C, whose limit is what 1.5 lakh rupees, but you are claiming 2 lakh rupees. So it is a apparent means evident from the face. So if there is an apparent incorrect claim that is claimed in excess, okay, then this it can also be checked by the CPC Bangalore, that is the system. Okay, allowance of loss claim, this allowance of loss claim if the return of year of loss was filed belatedly. If the return of year of loss you have filed it belatedly, you have filed a late return, then there is a loss or there is a disallowance of loss now, but you have claimed it, but you have claimed it in your return of income, so it will also be disallowed. Okay, now disallowance expenses or increase in income as shown in the audit report, but not considered in ROI. See, the report is uploaded by the chartered accountant. Okay, from 3CA, from 3CB, 3CD. Okay, all these forms are filed by the what? The chartered accountant in the tax audit. In the case of tax audit. Okay, he said that particular expenses which is shown in the PGBP portion should be disallowed. Okay, and the income should be increased by this particular amount in the profits. Okay, this is set by what? This is set by the chartered accountant. So this is what approximately suppose 75 lakh rupees of income to be increased. Okay, as per the tax audit report. But while filing the return of income, the assessee does not increase the income of 75 lakh rupees. So, which is clearly evident from the statement that is filed by the chartered accountant, that is the audit report, which is not matching up with the return of income. So this is also clearly evident. Then the system can check these particular things. And there is a disallowance of deduction under section number 10 AA, 80 IA to 80 RRB if claimed in belated return. See, all these sections will be available when the return is filed on time. But if the return is filed belatedly, then these allowances will not be given to you. These deductions should not be given to you. So if this is the case, then it should be disallowed. It should be disallowed. So these are the 5 cases where the CPC Bangalore can see. Okay, the apparent arithmetical error, apparent claims, incorrect claims. Okay, disallowance of losses if the return is filed belatedly, disallowance of expenses and increase in income in case of a mismatch in audit report and the return file. Okay, or disallowance as deduction under section number 80, 10 AA, or the profit link deduction 80 IA to 80 RRB if the return is filed belated. Okay, now before making an adjustment, Before making an adjustment, an intimation shall come to the assessee. Assessee will file an intimation under section number 143(1). Okay. A response received from the assessee shall be considered before making any adjustment. The intimation will be given to the assessee and assessee will be asked to reply back on that particular intimation. Okay. Whether you are satisfied with this particular thing or not. A response is received, then it is okay. But if the response is not received, within 30 days from the date of issue of such intimation, such adjustment shall be made, and the adjustment shall be made in that particular thing. Okay. So whatever the adjustment that is found by the intimation, that adjustment will be made in your return. And if there is a refund due, will be given to you. If there is what? If there is excess tax liability which is to be paid, it's to be paid, and the notice of demand should be raised on you. Understood or not? Now, what else they can be doing? See, tax interest fees in the section number 234 shall be computed on the aforesaid adjusted total income. As I have said that, okay, if there is a foreign tax credit of the prepaid taxes, that is a foreign tax credit relief under section 89, 90, 90A, 91 that you will going to see in 90 and 81, you will going to see in the double taxation relief chapter. Okay. And there is the interest fee of any amount payable or refundable to the assessee, then intimation shall be sent. Okay. Then if there is anything now, you need to send it. Then only you have to pay the amount, the assessee will pay the amount. In case of a loss return, if the loss is adjusted, then also the intimation shall be sent even if no amount is payable or refundable. If there is a loss return, no amount is payable, no amount is refundable, but there is a loss return. You need to final send the department will definitely send you the intimation. And in any other cases, acknowledgement shall be deemed as what? Intimation. Acknowledgement, that is after filing, just after filing, you will get the acknowledgement, na, which is also known as what? ITRV. ITRV is also there, na, which is known as what? Acknowledgement. Correct. That acknowledgement shall be also deemed as what? Intimation. But in case of a loss return, intimation shall definitely come to you. Okay. And in case of a relief under section 80, 89, 89, 90, 90, and 91, the intimation shall definitely come to you. Okay, in that particular case. But what is the final time limit to send that particular intimation? So, see, where there is a timeline, yes, there is a timeline to send that deduction in these two particular cases, but there is no timeline for the other cases. Okay, if the intimation does not come, then it's also okay. The acknowledgement number shall be deemed as what your intimation. But where the intimation need to be sent, okay, what is the timeline? The intimation should be issued within 9 months from the end of the financial year in which the return was filed, in which the return was filed. So, for the assessment for the previous year 24-25, the return is filed in the assessment year 25-26. Correct. So, this period ends on 31st March 2026. 9 months will be given to it. So, 31st March, December 2026. At this particular time, the intimation of the previous year 24-25 should be given. The previous year 24-25 should be given. Understood or not? But there is a case law of ACIT versus, that is the Assistant Commissioner of Income Tax versus Rajesh Jhaveri, stockbrokers. This that simple. This is intimation. Okay, this is just the intimation. This is not the assessment order. The assessment will be done in the various other sections, but it is not a assessment order. It is just the intimation order. Do not confuse it with the assessment order. Understood? This is done. Okay, but what they are saying that hence a revised return can be filed even after the receipt of the intimation if time is otherwise available under section number 139(5). 139(5) is what the revised return is what the revised return. When timeline of the revised return is available with you and the intimation is already given to you, so there is no worries. You can still revised return and the department will again send you the intimation based on the revised return. So the if the intimation came to you and you again revise your return, then it's okay, it's valid, there is no problem to it. You can even file your revised return after getting the intimation because the time limit to file the revised return is available with you. Okay, understood or not? So section number 143(1), that is the intimation is not an assessment. This is what they have set. Now we are starting with the core part of the assessment procedure. Okay, we have seen the intimation wala part, we have seen the documents. Okay, we have seen the intimation, we have seen the documents. Now we are moving ahead with the core part of the chapter, that is the assessment part. Which is the assessment part? Understood or not? Tell me this first. Till now, it is clear or not? We have seen only three sections as of now. Section number 143 1, section number 142A, or section number 142 1. Clear or not? Tell me this. Everything is clear. Very good. Now moving ahead to notice of scrutiny assessment. See, after getting the dosa, after getting the dosa, after eating the dosa by the assessing officer, if he found anything in that, he can ask for the special audit or inventory valuation. And after getting all those things, if he finds that the assessee should, there should be a chances, or there should be a possibility that the assessee might have done a tax evasion, so I need to open the assessment. So whether he can open the assessment? Yes. For that, he need to file a notice. He need to send a notice to the assessee. So under the notice will be given to the assessee for scrutiny assessment. So first is what the scrutiny assessment. That the beginning of assessment is what is scrutiny assessment. Okay, this is also known as summary assessment and everything. Okay, now see, for making assessment under section number 143 3. See, assessment will be done under section number 143 section 3. But to for the assessment, starting of the assessment, you need to give the notice first. Now, for the notice, it will be given under section number 143 2. So first the notice will come, and then the scrutiny assessment will start. So the scrutiny assessment will start under section number 143 3. Okay, for at that particular scrutiny assessment, he need to first give the notice to the assessee. So the notice should be given in the section number 143 2. Okay. For making the assessment in the section number 143, a or any other income tax authority which is authorized, that we have already seen in the previous section or previous chapter, not below the rank of income tax officer, is required to serve the notice under section number 143 2. Correct or not? Yeah. In this regard, assessing officer or the prescribed authority shall serve a notice within 3 months from the end of the financial year in which the return is furnished. In which the return is furnished means 3 months from the end of the financial year in which the return is furnished. See, the return will be furnished for this previous year, could be in the previous year, that is 25, 26. For the previous year, 24, 25, the return should be furnished in the assessment year 24, 24, 26. Okay. It will be ended on 31st of March 2026. So, from this 3 months should be given, that is till 30th of June 2026. The notice of section number 143 2 should come to start for the scrutiny assessment. If the notice does not come on the 30th of June 2026, then definitely there can be a no scrutiny assessment start on you. There can no scrutiny assessment can start on you if the notice does not come to you by 30th of June 2026. Understood or not? First of all, this thing. First of all, this thing. There is a second thing. There are two words. Understand it very carefully. There are two words involved. First is issue, and second word is serve. First is issue, and second word is what? Issue means that department sent the notice. Department sent the notice, does not bother about whether the assessee received the order or not. The first thing, issued one is said that the department should send the notice. If the department send the notice, it does not matter whether the assessee received or not. So when the word issue should will be written, when in the law the word issue is written, so they are saying that the department should send the notice to the assessee. Right? But in our case, what the thing is written, what the word is written, then a notice shall a notice. So in the serve thing, what is relevant that The notice should be received by the assessee, received by the assessee. The notice should be received by the assessee. So, if the word serve is written there, that is, it should be served by 30th of June 2026. So, it should be received by the assessee by 30th of June 2026. If the assessee received the order or the notice, if the assessee received the notice of the scrutiny assessment, suppose on 1st of July 2026, but on 0001 AM. This is also invalid. Now the department cannot open the scrutiny assessment on me, whether it's late for 1 minute, does not matter. Whether it's late for 000001. Then also that this is not applicable. The scrutiny assessment cannot be done because now the date changes. I received the mail on 1st of July 2026. Whether the department had said, whether suppose the department had sent the mail on 23:56 p.m. on 30th of June 2026. Well, department has sent on this particular time, but I have received it on this particular time. That's why the statement, that's why the notice is also irrelevant. Okay, you do not need to reply at all. If you are replying it, then reply it. The scrutiny assessment cannot be open to me because the time limit has already been expired. Because I received it on 1st of July 2026, and you can find the on the mail. You can do what that you can take the screenshot and attach that. See, this is the time where we have received it. Okay, then you can directly query that notice as well. Understood or not? So there is a wordings. There is very importance of the wordings of the law. What the wordings is saying, that is very important. Okay. Now, so the notice of the scrutiny assessment is understood by to you or not? Tell me this. The notice of scrutiny assessment is clear to you or not? Clear? Yes. The order for scrutiny assessment. See, I have sent a notice. After it, we have played the question answer session. We have played the question answer session. We will send you the notice. You will give me the reply. I will give you the show cause notice. You will give me the reply. All these things will going on, will go on, will go on. After that, the final order of scrutiny assessment will come under section number 143. The final notice will become under section number 143. Now, what they have said that the AO shall, by order in writing, not in communication, it should be in writing, not by oral, make an assessment of the total income or the loss of the assessee and determine the sum payable by him or refund due to him on the basis of such assessment. Whatever the assessment he has done, he will calculate your total income, he will calculate the total loss of that particular income. Okay, he will calculate the whole total income of the loss. If there is an income tax payable or the refund due to him, everything will be calculated by the assessing officer based on the notice and replies of the assessing officer and the assessee. And that's total not based on the assessment part. Now, the assessment shall be made after taking into consideration all relevant material gathered by him and also the evidence produced by the assessee. I have said you know, all the notices will be given to the assessee and there will be a communication back to the assessing officer on those replies of the notices. Everything will go on the show cause notice will be sent to the assessee and the assessee will give the reply. All those things, all those replies that is received, the assessee should be taken into consideration before filing or before passing of the order of the scrutiny assessment. First of all, tell me this whether it is clear to you. Clear, understood or not? Tell me this. Now, this is the case law. This is the case law. You do not need to understand, you do not need to remember the name of the case law. But what is the case law that you need to remember? It was held that during the assessment proceeding, the assessee can put forward claim of deduction, etc., which were not claimed in the ROI. See, you have filed an ROI. What it is saying, understand it very carefully. Suppose you have filed an ROI. Correct? Yes. The assessment opens. The assessment opens. Yes. The assessment opens. And suppose the assessment open on 30th of September 2024. Okay, you find the return on 31st of July 2025. Suppose it is a non-audit case. 31st of July 2025, and the assessment opens on 30th of November, 30th of September 2025. It can open, yes, it can open. What is the maximum time? The maximum time is what? 30th of, what is the maximum time? The maximum time is what? 30th of June 2026. Before that, whether it can open? Yes, it can open before that as well. So the assessment opens on 30th of September 2025. And in that case, you will find during the assessment or during the notices of the AO and you, during the communication between the AO and you find that there is a deduction. There is a deduction under section number 80C that I need to claim. I need to claim, but forgot to claim in ROI, but forgot to claim in ROI. See, the assessment opens on 30th of September 2025. Whether you have the time to revise your return or not. Yes, you have the time to revise your return. Now. So now, whether you can revise, suppose in the October, suppose it's the 10th of October 2025, you file the revised return. You file the revised return and claim the above deduction and claim the above deduction whether it is valid or not. Whether it is valid or not, yes, it is certainly valid. It is certainly valid. During the assessment, during the assessment, assessment was already open. Now, during the assessment, you get to know that the deduction that you need to claim. So whether you can claim those deduction, yes, you can claim. But the only way is to file the revised return and claim it. You cannot ask directly the assessing officer, please give me the deduction now. Please, please, please. See, please. This will not work. You have to give the revised return to the assessing officer, then only he will consider it. Okay, you cannot ask the assessing officer directly to please claim, please consider this particular claim. He will not consider it. If you want to consider him that particular claim, then please go and file what? Revised return. Understood or not? See, this is what they are saying in the this case law. In case we don't have that during the assessment proceeding, the assessee put forth claim of the deduction, etc., which was not claimed in the ROI, but only by ways of filing of revised return. And then AO is duty bound to entertain such claim. If he has filed with the revised return, then it is the duty of the AO to entertain such claim, and he will consider your claim. Understood or not? This is the only way. Understood? Now, there are three provisions that are important provisions. Might be important because everything, if you know the assessment of trust, now I have already given you the chapter of assessment of trust earlier. You will find the sections of assessment of trust in these particular provisions. Okay. Now, first understand what are the provisos. What are the provisos? See, if you see below the section, there is a line said provided that. Then again a para comes which says that provided further that. Then again a para comes which says that provided also that. Then again a para comes which again says that provided also that. And from now, every para will come as a provided also that. See, these are the exceptions. These are what the exceptions to the above provisions, to the section, whatever the section is written above now, before these things. So, whatever the section is written, these things will be an exception to that particular provision. Okay, that is why it is known as what provision. So, provided is the first provision. First provision will always be starting with the provided that. Second provision shall always be starting with what is provided further that. And afterwards, after the second proviso, all the provisos, whether it will be 3 proviso, 10 proviso, 20 proviso in particular section, all the proviso after the two proviso will be started with provided also that, provided also that, provided also. Okay, understood it very carefully or not? This is the first thing that you need to understand. That provided that the provisos written below the section is what the exception to the particular above provision. Okay, it will be exceptions. So, what are the exceptions you will see? The first provision that will be starting with what? Provided that. See what we are saying that for the assessee who has furnished is written under section number 140 and 139 4C. For the scientific wages association, they need to file the return of income under section number 139 4C. Understood or not? Or the association or institution which is referred in the section number 1023A, B, C, already studied in the section of, under the chapter assessment of trust. Clearly, if AO wants to complete assessment without exemption under 10, there are certain exceptions, exemptions under section number 10. Na? If the EU wants to complete the assessment without giving the exemptions under section number 10, then it is possible only on the fulfillment of the following two conditions. If these two conditions are fulfilled, then the AO will complete the assessment and will not give you the exemption under section number 10. Okay, what are those conditions? If the AO has intimated the violation of conditions of section number 10 on the part of the assessee, if the assessee has violated any of the condition of section number 10, then the AO will intimate to the central government and to the prescribed authority. So first thing is that the assessee has done a certain violation of that condition of section number 10 and the assessing officer has intimated to the central government or any of the prescribed authority. And the notification issued or approval granted to such a body has been discarded or withdrawn. So whatever the exemption will be given to the trust, okay, under section number 10, okay, or the approval which was given to the trust, okay, if that particular authority of the central government has withdrawn or rescinded that particular approval, then in that case, the exemption under section number 10 will not be given by the assessing officer. Okay, see, we have seen now assessing officer will definitely consider everything. Okay, the total income loss, he will consider everything. If you want to claim excess, then you can file the revised return as well. But in this case, where the assessing officer will not consider section number 10 exemption in case of 139 4C return filed in case of a scientific research or the association or institution where assessee has violated the condition during the assessment, the assessing officer got to know that the assessee has violated the condition of section number 10. Okay, so he intimated the central government of the prescribed authority, and the prescribed authority has issued the notification and withdraw such exemption to the first other scientific research association. So in that particular case, the exemption under section number 10 shall not be given. Section number 10 should not be given. And the same way, in the same way, the section number, the second provision is also applicable. What they are saying that where the assessing officer is satisfied that any fund or institution referred to in this section or any trust or institution referred to in section number 11 has committed any specified violation. Are you remember the specified violation and the assessment of trust chapter? Correct? As defined in explanation 2 of the 15th provision. There can be any proviso. To clause number 1023, 10 clause number 23C, section number 10, or the explanation this 12AB. What I am saying just a specified violation is important. Okay, if the assessing officer is satisfied that there is a specified violation done by whom? These are the authorities, any fund, institution, trust, or institution which are registered under section number 11. Okay, in the assessing officer, he shall send a reference to the principal commissioner or the commissioner to withdraw the approval or the registration as the case may be, and simultaneously no order making assessment of total income or loss or fund of this without giving effect to such order passed by the principal commissioner or the commissioner. Means what? First, you need to give the reference. First, you need to say to the principal commissioner or the commissioner that there are the specified violations of by these trusts. Please withdraw the application. Please withdraw the approval of the registration of these particular trust or the funds or the institutions. If that is done, then after getting it done, so whatever the notice is passed, whatever the order is passed by the principal commissioner or the commissioner of cancelling or refusing to cancel, he must take into account, the assessing officer must take into account, and then only he will apply, he will do the assessment accordingly. If the registration is cancelled, then it's okay. If the registration is not cancelled, he refused to cancel the registration. Then in that particular case, he will give all the exemptions or deductions that is applicable to him. So no order making an assessment of total income or loss or trust shall be made by him without giving the effect of the order passed. Okay, so what they are saying that it is putting a restriction on the AO that you cannot pass any order without giving the effect of the order which is passed by the principal commissioner or the commissioner. Now what they can do, either they can approve the registration, they can say there is no violation, I am okay with it. Okay. If they say that yes, there is a violation, I am going to withdraw the application. So if the application is not withdrawn or the registration is withdrawn, then the exemption will not be given in that particular case. So the assessing officer cannot give the exemption. But if the principal commissioner said that there is no violation, there is no specified violation, so in that particular case, the assessing officer need to give the exemption as understood or not. This is what the second proviso is. Now, coming to the third proviso. For the universities, college, and other institutions, which is referred under section number 35, that is for the scientific research wala part. If EU is satisfied that the activities are not being carried as per the condition which was with which such body has been approved. Okay, whatever the condition with such body has been approved, all those conditions are not fulfilling. Then what? Then he may, after given an opportunity to the assessee, recommend to the central government to withdraw the approval. To withdraw the approval. This is the basic thing that you need to understand. Understood or not? These are not as much, very much important. They can be asked. So understood these things. The section number 143 is also clear to you. So to start with the scrutiny assessment, first the section number 143 2 says that you will need to, the assessing officer need to give the notice. After that, the order will come under section number 143 3. Okay, understood. Now we are coming to the best judgment assessment. Just understand this best judgment assessment first, and then I will be giving you a 10 minutes. Okay, now best judgment assessment, that is the section number 144. It is also known as what? Ex parte assessment. It is also known as what? Ex parte assessment. Why this particular name is given, sir? Ex parte assessment. See, in this particular case, it is what a best judgment assessment means. The assessee is not cooperating with the assessing officer. The assessee is not cooperating with the assessment officer, sorry, assessing officer. So the assessing officer, in his best judgment, done the assessment. In his best judgment, done the assessment without asking to the assessee, without asking to the assessee. That is known as what? Judgment assessment. It is the assessment which is done on the best judgment of the assessing officer. Okay, and there's only a one party, now the second party is not present. That is the assessee is not present in this particular assessment. Now that is why it is what? The assessment. If it what? It's not as assessment. That is the only single party has done what? The assessment, and the second party is absent. It is not present. That is why it is what? It's party assessment. Okay. Now, on what ground the best judgment assessment can be done? See, first two grounds I have already said you. See, so if there is a return 139, there is not 1.39, no 139. If there is failure to furnish a return, if he has not furnished a return, belated return as well, or not furnished the updated return, in all these cases, adjustment can be done. Yes, it can be done. So best judgment assessment can be done. Yes. If failure to comply with the notice of 142.1, we have seen that failure to comply with 142.2, that is a inventory valuation. Okay, and failure to comply with 143.2. 143.2 is what? Notice of the scrutiny assessment. If all these things, if there is a failure in all these things, whatever we have seen above, then the best judgment assessment can be done. The assessing officer on his own can do the assessment. Okay. Then the BJA, that is the best judgment assessment, can be take up only after issuing a show cause notice. The assessing officer first give a show cause notice that why we should not initiate the best judgment assessment on you. What the notice reply came, the assessing officer will take into consideration, and then whether he will find it whether he is find it considerable to consider it, and not start with the bad judgment assessment, then it's okay. But if he found that if he found that the reply is not coming okay, or the reply is not satisfactory, though he can ask for the bad judgment assessment. So in no case, refund cannot be issued to the assessing by the assessing officer under section number 144. Means that whether the refund is made, see, whether originally the refund is claiming, but we will not give you the refund in that particular case. Okay, by totaling, by opening your bank business assessment, okay, we found that these are the claims or these are the things. If you have to file the return of income, so these are the incomes. Okay, this is the tax payable, or there can be a chance that there is a loss. So that is why the refund is also made, or the deductions is higher than the income. So the refund is making, but you have not filed the return of income. You are not cooperating with them, with us. So we will not issue any kind of refund. So under section number 144, refund cannot be issued. Refund cannot be issued. Now, assessment under section number 143 and 144 should be completed, that is auto pass, within 12 months from the end of the relevant assessment year. RAY is what? Relevant assessment year. Whatever the assessment year is this, okay, so it should be passed within 12 months from the order from the end of the relevant assessment year. Understood or not? Clear? So this is what section number 144 is all about. Coming to section number 144A, 144C, these are just a read sections. These are just a read sections. But we will just read it. Okay, we will just read it. I'm not saying I am not going to read it. We will definitely going to read it. What is DRP, what is CITP, we'll go and see it. And then the most important sections will come. That is section number 147, 148, 148A. Okay, these are the section which is combined. Okay, 147, 148, 148A are the single assessment. Are the single assessment. You need to understand it simultaneously, these three sections. And after that, just 149 is also a part of 148, 147, that is a reassessment. And after that, there is a rectification of mistake, a small section, notice of demand, and then this particular block assessment will come to your part, and we will understand this particular whole block assessment without the help of notes only. We will understand it in the brief that what is all about. Okay, so there is a small part which is left. So first, we will take a break of 10 minutes. Okay, and then we shall be starting with section number 144A. Okay, take a time. Let's go. Yes, everyone, welcome back from the break. Just let me know whether you came from the break back or not. And then we will be starting with these two sections, 144A and 144C. After this, I am not going to start 147 as of now today. 147, 148, and rest of the section we will complete it tomorrow. But today, what we are going to do is after 144A and 144C, we are going to see the question and answers of those the sections that we have completed now. Okay, and then we shall be winding up the session tomorrow. Okay, the chapter will be winding up tomorrow. So just giving 2 more minutes. Just come back, everyone, and then we shall be starting. Just 2 more minutes. Yes, come back. Now, starting with the section number 144A. It gives the additional power to the joint commissioner. That is the joint commissioner on its own, that on show motor, if required necessary, or on application by the assessee, or on application by the assessing officer, can be done by three of the modes, either suo moto, or application by the assessee, or reference made by the AO. On any of these three conditions, he can call to examine the records of any proceedings in which the assessment is pending, in which the assessment should be pending. If the assessment is completed, whether the joint commissioner can ask for it? No. The joint commissioner cannot ask for the examination of the records. When he can ask? When the assessment is pending. And if it is necessary, then the joint commissioner may issue directions for the guidance of assessing officer to enable him to complete the assessment. He will guide to the assessing officer how he should approach that particular assessment, and the direction what will be given by the joint commissioner should be the binding on the assessee in the assessing officer. And if the direction given to the assessing officer is prejudicial to the assessee, prejudicial meaning is what is if it is not in favor of the assessee, then definitely an opportunity of being heard should be given to the assessee, and no appeal can be filed against such direction. Appeal can be filed by against such assessment order. Appeal can be filed against the assessment order, not the directions given by the JC in this particular case. Understood or not? This is very simple. Just read it now. Section number 144C, that is a reference to the DRP, that is a dispute resolution panel. See, you can ask for the, if you are not satisfied with any of the assessment order, then definitely you can ask for the dispute resolution panel, and it is made for the expeditious resolution of the dispute, means fastest resolution of the dispute, to facilitate the fastest resolution of the dispute. The DRP is made in which there will be a three commissioner of income tax will be constituted. Okay, in a bench of a DRP, there will be three commissioner of income tax. Okay, eligible assessee who can ask for the dispute resolution panel. They see the non-resident or a foreign company can ask for it, or any person related to a transfer pricing case if variation due to the TP order is given. Okay, what is the TP order? What are the variations we will see in the transfer pricing? Okay, but the non-resident or the foreign company or the person which is in case of a transfer pricing, he can ask for the DRP to go. Okay, in this case, he can ask for the DRP to go. See, there are two ways. Either you can challenge the particular assessment order in CIT appeals or DRP. If you are going in the DRP, then you cannot go in the CIT appeals. If you are going in the CIT appeals, you cannot go in the DRP. Understood or not? Yes. AO shall forward the draft order to the eligible assessee. First of all, what is the assessment order? The draft order shall be given to whom? The assessing of the assessee. If the assessee is the assessee is not successful to it, based on the draft order, he can give what? He can ask the DRP to intervene. Okay, the assessee shall be given what 30 days of receipt of such draft order. Shall either accept the draft order or file the objection against the DRP. Then within 30 days, he had to do the things. Now, DRP either may confirm the assessment order or reduce the assessment order or enhance the variation of the draft order. He can say the assessing officer has calculated the draft order based on the variation is suppose 2 lakh rupees. But now after seeing or after verifying this thing, we are saying that the variation is of 3 lakh rupees. Now you have to give the tax on 3 lakh rupees. So the DRP can either confirm whether the assessment order that the draft assessment order is correct, or it can also be reduced, or it can also be it can also be enhanced. Now till what time the DRP can issue its direction? It should be issued within 9 months from the end of the month in which the draft order is forwarded to the assessee. Is whenever the assessee has received that particular draft order, within from that end of the month, 9 months will be given to the DRP, and the DRP shall be issued at such directions. Okay. Now, DRP shall issue directions after considering the following: the draft order, objection filed by the assessee, evidence furnished by the assessee, reports and other evidences. These all things will be taken into consideration before giving the final order by the DRP. Now, direction issued by the DRP shall be the binding on the assessee, but sorry, binding on the assessing officer. But the assessee can challenge it. Yes, the assessee can challenge it in the higher authority like ITAT. After DRP, there is a higher authority called ITAT where you can go and challenge the particular order. But for the assessing officer, it should be binding. Okay, an order passed by the assessing officer on the basis of the directions of the DRP shall be directly appealable to the ITAT that I have already said to you. Now, eligible assessee means these two assessees, okay, have the two choice: file objection before the DRP against the draft order, or not to exercise this option and file an appeal later to the CIT appeals against the final assessment order passed by the AO. See, the AO passed a draft order. If you aggrieved by the draft order, you can go to the DRP. But suppose the AO has filed the draft order and you have said nothing, so AO will pass a final order. Okay, and this particular final order can be appealed in the CIT appeals. Can be appealed in the CIT appeals. You cannot go like this thing. You cannot go like this thing. Like based on the draft order, you go on the DRP. Okay, when the final order comes, now you are going to the CIT appeals. No, if the final orders come, then you can appeal it to the ITET, where if you have gone to the DRP first. Now you can go to the ITET. Okay. If you are not going to the DRP first, so what type of process you follow? The final order first to can be appealed in the ICIT appeals, and then you will go to the ITET. Understood or not? This is clear to you. And this portion is for the block assessment. We will see when the block when we will see the block assessment, we will see it tomorrow. Okay, the section number 144A, 144C, everything is done. Yes. Now coming to the question bank, question number 2. This question you need to solve. Giving you 2 minutes, solve by writing. What you need to do, this is a case law. If this is a case law, I have said it various times. First, you do the write the provisions, then you will write what, then you will write the facts of the cases, then you will write the analysis, and then you will write what the conclusion, and will give the heading of all these four and solve this particular question number 2 first, and then we shall be moving ahead. And then we shall be moving ahead. Understood or not? Clear? So giving you 5 minutes. Okay, let me put a timer. Otherwise, you will not say na. I am giving you a 5 minutes timer. Okay, stop it in 5 minutes. The timer starts now. Okay, the timer is showing it on your screen on the above right. Okay, top right. The timer starts now. You have 5 minutes. Go ahead. Listen, don't do the part number B as of now. Okay, only do the part number A. Don't do the part number B right now. Yes. So have you solved? I got the answers from other students as well. Have you solved it? Yes. See, what this particular question is saying, teachable education is a trust which is approved under section number 1023C, which runs various educational institutions. During the course of assessment under section number 143.3, that is a scrutiny assessment, the assessing officer finds that the trust has carried out its activities in contravention of the section under which it was approved for exemption. Hence, the assessing officer wants to pass an order without giving exemption under section number 10. That is what it is talking about, the second proviso to section number 143 to the second proviso. Understanding it? 143.3, sorry, 142, 143.3, correct? Yes. Which the assessee objects. You required to examine the following with respect to the provisions of Income Tax Act 1961. Whether the assessing officer can pass an order without giving exemption under section number 10. Yes, he can pass, but what he need to do? He need to first give the application to the principal commissioner or the commissioner of the income tax to withdraw such exemption, and he should not pass any order without giving the effect of the order of the principal commissioner or the commissioner. If they said yes, then you can do. If he rejects the application, then you have to give the deduction of section number 10, exemption of section number 10. If he cancel, if he does not cancel the registration, then you have to give the exemption, and if he cancels the registration, then you need not to give the exemption in the section number 10. Okay, understood? This is the thing that they have, right? There is a specified violations, principal commissioner of the commissioner to withdraw. Okay, and after that only you can do the same. Okay, after that you can do the same. Everything is just same that we have already studied. So first you will write what the provisions. Okay, and then you will write what the fact of the case. Okay, and then the assessee has done the certain violations. Okay, the specified violations. So what are the cases that you need to write, and then analyze the case. Okay, and then you need to give the conclusion that yes, he can because in that particular case it is not clearly evident whether the what is the directions of the principal commissioner of the commissioner. So in that particular case you can give the final dicey conclusion. Okay, now Point number two, question number two is not as of now understood by you, so just wait for it. Okay. Let me see. Solve question number seven. I'm giving you the question number seven. Solve it right now. Again, giving you 5 minutes. Time starts now. Solve it. You need to write it. Okay. I know this is a direct question and you are able to solve it, but you need to write it. Given the 5 minutes to write, not to just think what is the answer. You have to write it. Yes, able to read. This is the exactly the direct questions. Okay, what is the DRP, eligible assessee? Okay, when can a grievance of for resolution of the assessee be filed within 30 days? Okay, and what are the evidences they will see? Everything we have seen, this is the direct question. Yes. See, what I have said, you know, what is important is to see the concepts in this particular chapter. If you have seen the concept in this particular chapter very well, then there is no need to solve the question as well. But solving of the question is certainly an important a part because you need to understand how questions are framing. So just to understand how questions are framing, you need to check the question and answers of this particular chapter. But if you know the concepts, then it's well and good. Then it will be over. This is also the direct question of section number 144. That is a best judgment assessment. You can write it directly. Question number 8 is your homework. That is a direct question. Okay. I'm giving you one or two questions more. That is section number 143 one. That is a intimation question. And this is also the direct question. Question number 10. Okay. You can write it. All these points we have already seen. Just all these 5 points, you will get the marks. These 5 points, you will get the marks. Uh, Wait for this. Just wait for this. Now we have already seen that a fresh claim before the assessing officer can be made only by filing a revised return and not otherwise. Yes, we have seen the case law. See, this is the case law that we have seen. You have to read it. That's it. Okay, but right now you need to first explain the provisions of 139.1, then the revised return. First, you will read to those provisions, and then you will quote this particular section, and then it will be fine. Okay. Uh, Question number 13, just read it once. Question number 13, just read it once. The assessing officer, within the power vested in him under section above 143, 142A, okay, it's the inventory valuation, while examining the accounts of the PNF Limited, has ordered to get the same auditor. Yes, the company challenges this order on the ground that the opportunity was not given to them by the assessing officer prior of passing such order. Prior to pass such order, he has been given the opportunity of being heard. Discuss the correctness of the action of the assessing officer. See, before passing of the order, the opportunity of being heard should be given to it. Definitely, definitely, definitely. So, whatever the order which is passed by the assessing officer is not valid in this particular case. See, therefore, in this case, the order is not valid since the opportunity is not given to it. Okay. Uh, Let me see, is there any one or two questions more? 26, 27, if I have to say. Question number 26. Just write this question, takes again 5 more minutes and write it again. The timer starts now. You have to write it. This chapter is important. You have to write it. After this, we are going to wind up the session. This is the last question we are solving. Okay. So write it correctly. Write it fully with full faith. You are getting the confidence in the particular chapter, but you have to write it again and again. You have to recall it again and again. Yes. So I have implemented with also the question, but there is a point number four which you will not be able to understand because this is a point of penalty chapter. Because this is a point of penalty chapter. In this, what they are asking for failure to get the books of account audited under section number 142(2)(a), can prosecution proceedings be launched against the assessee? Yes, it can be launched. If yes, what would be the quantum of punishment? So the rigorous imprisonment for 1 year plus fine, it should be applicable under section number 276D. 276D. Understood? This is the only thing. Rigorous imprisonment of 1 year plus fine can also be applicable under section number 276D. All these 3 points are exactly same. Yes, 10,000 penalty. You understand it easily. So question number 26 is also done. See, in this particular chapter, what I have said to you earlier as well, this chapter is based on the concept. If you understood the concept, then it's very good. Then it's very good and you'll be able to solve all the questions. So in this thing, we have completed 144A, 144C. Now, tomorrow onwards, we shall be starting with section number 147, 148 because I don't want to start section number 147 as of now because if I start section number 147, it has a linking with 148, 148A, 149. Everything, every section is going to link. Okay, so I will be starting it afresh tomorrow, and after that, we will be completing the block assessment wala. Okay, 153 and 150, everything section will be completed. Rectification of mistake is it is a very small section. Then we shall be starting with the block assessment. Okay, and we shall be winding up the session most probably by tomorrow. Most probably by tomorrow, this chapter is also going to be over. So take care. Okay, and if you have any doubts, you have my number, you can directly message me. So we'll be meeting tomorrow. This is all for the day. So take care and keep revising all these things. Okay, and after that you have to give the test as well of this particular chapter. Take care. Bye.